and good morning, colleagues. Good evening for those connecting from Washington. A very warm welcome to this new, unfortunately, virtual T-CoP meeting. So we're all longing for the days when we can again meet face-to-face. So today's T-CoP webinar will be on cash management in times of crisis, or maybe in terms of protracted crisis, should I say. Because that's really one of the specificity compared to the last time we met. As we see from the strong participation today, there's really great interest in this topic. I'm sure it keeps treasuries and debt departments awake at night. And indeed, no one really had anticipated that this crisis would last that long. And many of us have actually used the cash buffers already in the response to the first and the second wave. So it will be very interesting to discuss today how the different countries are coping with the situation, both on the revenue side and on the expenditure side. And we have actually a very rich program to be able to do so. Let me run you quickly through the agenda. So first we'll have the opening remarks by Dr. Heo, the head of the PEMNA Secretariat. Then we'll move into our first session. And there we have two good speakers. One, Mr. Leandro Secundo from the World Bank, a senior debt management specialist. So he's working across the globe, and many of you may have seen him in Asia. But before that, he was deputy head of the Brazilian Debt Management Office and head of the front office at the Brazilian Treasury. So I think he has lots of hands-on experience. So then we'll have a presentation by Mr. Yong-Won An, Deputy Director Treasury of Korea, to share the Korea perspective, how they have managed through the crisis with very proactive cash management. We're trying to mitigate the impact on people, on firms. We'll then have a Q&A session, and so I'll invite all members to really actively participate. I may call on you. You can also use the chat box to send in your questions, because the idea is really to have a dynamic exchange of experiences and ideas during this session. Before we then move to the second session, which will be focused a bit more on balancing costs and risks in response to the crisis. And there we'll have a great presentation by Eduardo Antoni Marino, who's a veteran of the T-CoP community, Director of Asset Management Services at the Philippines Treasury. And so while his function is mainly on placing idle cash and maximizing revenue these days, he's also concerned about the liabilities and fiscal risks coming from that. And then we'll have a country update from Tin Nguyệt Nga, Deputy Director Cash Management at the Vietnam State Treasury, a country that has managed very well the pandemic, and it's already exiting it. And as we can see, they're meeting in the World Bank office. So I wish I were with you there. Greetings. We'll then have another session of Q&A and comments. So please also use this Q&A to just come in and share your experiences, your views before closing. So that's for today's program. Without further ado, let me hand over to Dr. Ho for the welcoming remarks. Thank you.
Thank you, Fabian. Good morning and good evening, everyone. It's my great pleasure to welcome you to the first T-CoP webinar this year. I am very grateful to the World Bank, Korean Ministry of Strategy and Finance, European Union, and Fabian, T-CoP facilitator and program officers in the PEMNA Secretariat for making this webinar happen. I would like to thank all the speakers from World Bank, Korea, Philippines, and Vietnam who volunteered to share your experiences. Without your support, this webinar wouldn't be possible. We all experience an unprecedented situation with the global COVID-19 pandemic. Although the immediate issue of the pandemic is health risk, as a PFM practitioner, you have to face the unprecedented challenges in the area of public finance every day. Without enough knowledge or evidence, you need to make a decision under great uncertainty. On the Treasury CoP side, cash management has been one of the most popular topics in the previous PEMNA meetings. However, the pandemic made the cash management much more complicated. With the increasing expenditures and decreasing revenues under the COVID-19 shadow, balancing and managing the cash flow became much more challenging. Last year, we were just focusing on emergency response, but this year, we should consider fiscal sustainability as well. Since we don't have enough knowledge or experience coping with the pandemic, I believe the continuous conversation with your peer group could be a tremendous help in this situation. Today's T-CoP webinar is an excellent opportunity to learn from your peers. Presentations from World Bank, Korea, Philippines, and Vietnam provides the most recent updates of the current situations, what has been done, and what needs to be done in terms of cash management issues. Unprecedented crises also present opportunities for reforms. I believe that by participating in this webinar, we are in the right place and the right time. Together, let us accelerate the exchange of ideas and scaling up of good practices. I look forward to hearing your discussions and learning from your insights. I sincerely hope you will enjoy today's webinar, and thank you again for your participation. Thank you.
Thank you very much, Dr. Ho, for these inspiring words. Indeed, quite a shift from emergency response to more long-term fiscal sustainability and risks, and we'll have plenty of very good examples in this presentation, but also maximizing the crisis as an opportunity to improve and reform. That's great. So let us maybe dive into the first session. Let me call on Leandro, who will give us a global perspective, both in terms of cash management good practices, but also how they have been tested in times of crisis and the different responses that we have seen across the world. Leandro, the floor is yours. Thank you.
Thank you, Fabian. Should I share my screen from my side here for the presentation?
So unless the secretariat can do that, that's maybe more convenient if it's centrally done.
It's fine with me, just to know.
Yeah, if you could do it from your end,
okay,
it will work. Yeah,
sounds good. Let me. Can you see it now?
yes.
Excellent.
Okay, thank you. Thank you very much, Fabian. And first of all, thank you very much for PEMNA for the invitation. It's a pleasure to come here and to share a little bit of a global perspective and what we have been seeing in terms of cash management around the world. So as Fabian mentioned, the idea today is to cover cash management in time of crisis, focus on what kind of actions government has been taken and to respond in an emergency situation, but also what kind of concerns may arise once the crisis is over. So for the agenda, I basically have three blocks here. The first one is cash management sound practices, and here I'm borrowing a little bit of a paper that I have published last year with my colleague Joscon Jangos in terms of what countries has been doing in terms of sound practices. This is based on the experience of 24 countries that have attended our cash flow forecasting and cash management workshop. In case countries are interested to participate in these workshops, please reach out to us. We have delivered so far in Latin America, Africa, and Europe. And the idea is to have this workshop or this 1 week training for Asian countries very soon. And then I will talk about the actions itself. So I have made some research specific for the 14 PEMNA countries. What kind of measures has been undertaken? What are the similarity between countries? And what are the concerns that countries should be mindful in terms of these measures looking ahead? And third, I'll talk a little bit about financing cash flow gaps. Of course, as you know, in the crisis, there were some reduction in the expenditures, some increase in the expenditures and reduction in the revenues. So need for extra financing is a common feature in all the countries. So what instruments countries can use, and one of them is having the support from the monetary authority. So how the central bank has been stepping in this crisis, and what we see as good practices on when monetary financing would be something that makes sense or not. And then I go to the conclusions. So in terms of how do countries perform sound practice, as I mentioned here, we have the reference for the paper that I've mentioned. We have this paper in the World Bank website, and this table you can find in the paper. So basically here we just replicate two respectful references in terms of cash management, Liner from a paper of 2009 and Williams from 2010. And basically they are saying the two columns are saying the same thing, like what are considered the building blocks or sound practices in terms of cash management. It's just that Liner brings a little bit more of granularity than Mike Williams. So I'll go through all of them very quickly. So the first one is the establishment of a Treasury single account, and here we call TSA structure, because not necessarily it needs to be a single account, but it needs to be a structure that consolidates all government funds in just a single structure. So this is, of course, the very first component or building block for sound practice in terms of cash management. And then cash flow forecasting itself, understanding what is the coverage of cash planning. So it's quite common that countries use the budget as the initial basis, which is fine. But countries also need to be mindful that there are some extra budget flows that may be considered. So whatever impacts or hits the TSA should be included in the cash flow forecast. And then to do that, it's important to have also, of course, capacity building in terms on how to make these accurate projections and how to create some networks to apply what we call the bottom-up approach to get information for all the stakeholders needed to perform robust cash flow forecasting. In terms of systems, of course, it's important to have robust transaction processing system, but also payment, settlement, and banking system to make the funds flow as quickly as possible to minimize the cost of having the cash in a specific account until it's reached the final objective. Last but not least, the use of short-term instruments. So in the paper, you can find some reference of how countries has been using T-bills, either for cash management, but also for debt management. So this is a very intersection point between cash and debt management, how to use the short-term instruments. And there are, of course, many others for cash management that are more prone to the cash management function than to the debt management one. And the last is the institutional arrangement. Here you see a little bit of difference between Liner and Williams. So if it's needed to have an integrated unit for cash and debt management, or if coordination would be sufficiently fine, I would kind of agree with Williams that not necessarily you need to have them integrated, but that may be good. But if you have good coordination, it may be enough. So this is just to set the scene in terms of good practice. And here I bring some data from DEMPA, which is the Debt Management Performance Assessment, which is a tool developed by the World Bank to assess how countries has been performing in terms of debt management practices. And there is a specific debt performance indicator that assess cash flow forecasting and cash management. So using a sample of 80 countries where this assessment has been done in the past few years, we have some interesting data here, either for the sub-indicator related to cash flow forecasting or cash management. We basically see, you see the blue bars are the cash flow forecasting. So this is the percentage of assessed countries that reached the minimum requirement level, which is score C for cash flow forecasting. And the orange bars are related to cash balance management. But what is assessed for this indicator? So for cash flow forecasting, to get the minimum requirement, it's required that countries have reliable monthly cash flow forecast for an horizon of the budget year, and that this cash flow forecast is updated on monthly basis. To reach the maximum level or score A, it's needed that at least for the coming month, there is a daily breakdown of the cash flows forecasting. So what we see is that for these 80 countries, just 28% reach the minimum level or the score C. And we see that in some specific regions, the situation is even more critical when looking, for example, in Africa, and even for East Asia and Pacific, just 25%, 1/4 of the countries reach the minimum requirement. But the situation is even more critical when we look at cash management. So the requirement, what we are talking about cash management, is basically how countries has been using short-term debt instruments to raise the needed resources, but taking into consideration the cash flow forecasting. So how the cash flow forecasting has been used to define the amounts of short-term debt that will be issued, and also the investment of excess cash in the market based on defined credit risk limits. So we see that just 80% of the countries reach this minimal level, and in 3 out of 5 regions, none of the countries has this minimum level, which is score C. For having a score A, it's required, of course, that all this instrument has been used, but just been used on daily basis, so you can adjust your cash balance to whichever is the target you have. So again, to set the scene and see that even before crisis, countries, and these 80 countries are mostly low-income countries, but it's a large sample of countries, but there's still lots of challenges in terms of cash flow forecasting and cash management to get whatever we consider sound practice. So talking a little bit about the PEMNA countries, I don't expect you to read what is in this table, so don't worry too much. Of course, the presentation has been shared with you, so then you can take a look later. But what I try to do here is just based on these two sources, the IMF policy tracker, the policy responses to COVID-19, and the World Bank dashboard related to financial sector support measures in response to COVID-19. So what countries has been doing, what kind of measures has been doing. So I try to frame the measures in similar categories so we can better discuss a little bit with more granularity in terms of which measures has been taken. So each of the colors are one category. So as you can see on your left bottom part of the slide, you have the 9 categories. And
Hello?
hello. Okay. So what I was saying is that for the colors, for example, for the brown ones are the measures that has been undertaken that increase expenditures. So in the very first line, it's a common line for, of course, all the countries like have had to revise their budgets to increase health-related expenditures. But there are other types of expenditures, as for example, cash transfers for households, for workers, for specific sectors of the economy. So whatever is in direct impact, the expenditures, revision of the budget is in this brown color, while in gray, I try to classify whatever is impacting the revenues. So when you're reducing your revenue collections, and some examples are the tax reliefs, reduction in social security contributions, so on and so forth. This table is not meant to be exhaustive. It's just to bring some examples for the region and like what are the measures, what we are talking about. So then you have this pale color here, a little bit of yellow or brown, which is the guarantees or contingent liabilities. And basically here I see two categories. One is many governments providing guarantees for SMEs. And the other one is some countries providing either exemption or waiver in utility bills, water, electricity. So just bringing up that it's of course understandable. This is a crisis, but depending on this is an SOE or a private company, it may require some kind of government support in the future. So that it may be ending up being an explicit or an implicit contingent liability. So I try to categorize as contingent liability. So these light green are a couple of examples of countries that have created specific funds or instruments to raise extra funds to cope with the crisis. So here you can see the example of Brunei and China, where they created some specific bonds for that. I have seen that Indonesia also has issued some COVID-related bonds. And also in this category, we see that Malaysia, and this is just one example, I'm sure many other countries has been done that, has increased the debt ceiling to enable more raising through debt issuance. So in Latin America, for example, I know that Costa Rica, Ecuador, and some other country has suspended temporarily the fiscal responsibility law, but just a way to increase the portion of debt issued to cope with the enlarged expenditures and reduced revenues. So a little bit more of example, I'll just mention here the red one, which is, I will go a little bit deeper further in the presentation, which is related to monetary financing. So how central banks has providing some direct financing for government, either buying government securities in the primary market or in the secondary market. So what kind of unconventional support the central bank has been providing in terms of monetary financing? The bright yellow, I just found two examples, but again, this is something that I'm sure many countries has been doing. It's like what has been what has been done in terms of adjusting cash and debt management strategies. So interesting examples here that Singapore has increased their contingent fund. So I understand that there was an increase in the cash buffer to be better prepared for future situations when more cash is needed, which is quite interesting at a time that countries are searching for more funds. Actually, Singapore take this measure to just increase the contingency fund, so it's quite interesting. And Thailand, it's explicitly mentioned in one of the sources that there was a revision of the bond issuance program. Most of the country has been doing that. It's interesting to learn which countries has announced it to the market, has revised their auction calendar. So it's interesting to see. And lastly, the dark green are measures also basically taken by central banks, but more on the regulatory and liquidity, banking liquidity side. So for example, reducing interest rates, quite common in most of the countries, reducing reserve requirements, some countries waiving some kind of regulation to allow banks lending more for SMEs in terms of countries. So, for example, uncollateralized loans, and just providing some incentives for banks to lend more and providing more funds for needed business. So, very basic overview for the countries. I have an issue here. Just a second. Okay. Okay, I'm sorry. Okay, so and here I just try to frame all these categories in terms of, okay, but how all these measures impact cash management practices. And then the colors are the same that I've just mentioned. So for increased expenditures, it's of course expected that there will be an impact in cash flow forecast in terms of the timing of the flows, the size, the seasonality, if measures are producing effects just on temporary basis for some of the categories of revenues and expenditures. How frequent cash flow forecasting is being updated, because these measures haven't been one-off measures. There is a kind of sequence of measures, so it's needed to have more frequent, more active cash flow forecasting. As I mentioned, revision of borrowing plans, recalibrating cash buffer, if not now, later on, adjustment in process of payment given the restriction for mobility and all these things. So even like, for example, for cash transfers and for citizens to make their payments, what kind of measures has been taken to make like it more digitalized, for example. So for revenues and expenditures, it's mostly the same. What the impacts are, it's more on the cash flow forecasting, borrowing plans, and cash buffer. But I mean, I'm happy to discuss more. This is just some food for thought. In terms of guarantee schemes, one issue that I would like to raise is that some countries, these guarantees directly provided by the central government. In some countries, the central bank also has stepped in. So it will be interesting to learn if these guarantees are called, if governments will have to bail out, to have to pay these guarantees, or if the central bank will also step in. But it's an interesting contingent liability. And another one that I mentioned is this I'm sorry.
Sorry, I think Vietnam, you look muted. Can you please mute? We have background noise. Thank you.
So as I mentioned, some discounts or some waivers for utility bills has been provided. So some examples here are Laos, Malaysia, Thailand, and Timor-Leste. So one question here is basically how to measure and incorporate this in the cash flow forecast, because this is not certain flows. This is something that can happen or not. So how to, for example, work with some scenario analysis, with some probabilities, and how countries do that. So in our end, in our team, we also provide some kind of technical assistance on contingent liabilities, on measuring these contingent liabilities, and how debt managers actually are more working on that. So it's good to work closely with debt managers to better understand how this kind of flows can be incorporated in cash flow forecast. I have already mentioned in this green, like specific instruments that have been created, some specific earmarked funds to raise more funds and use for the specific expenditures related to the crisis, to the health crisis, increase of debt ceiling for Malaysia, and just a little bit of more question. I didn't find much in these references, countries shortening debt maturities. I'm sure many countries has been doing that. And one interesting point for discussion is exactly whenever it happens, countries will use more T-bills not only for temporary financing, but more for financing the budget itself. So how markets react and how markets see T-bills as a debt or a cash management instrument. And later in red, as I mentioned, the monetary financing, just a couple of examples where central bank has stepped in either in primary market or in the secondary market. And a very interesting case that we can learn more in the next presentation about Philippines, related to a repo agreement that the central bank has been lending to the government, but just on temporary basis, a kind of overdraft facility, let's say, but in a repo agreement using securities. So of course, all in all, this triggers the need to a stricter coordination with central banks in terms of limits, how much they will be step in, and time, program duration, so on and so forth. So what needed to be adjusted, I mentioned already in terms of buffers, strategies, cash and debt management strategy in yellow, liquidity banking system. Not related to the 14 PEMNA countries, other measures that could be or maybe has already been taken. So for example, in Brazil, use of some earmarked funds, so releasing these funds for regular expenditures, use of sovereign funds in case of Angola and Kazakhstan. Intra-government borrowing, I know that some presenters will touch upon this, but how to make better use of available resources of government outside the central government, but SOEs, subnational, what are the benefits of it, and how and what are the risks related to this kind of tools. I have a couple of examples of countries in the paper that I mentioned, some countries that has this kind of scheme, not related to the crisis, but on regular basis. And in the last case, if there is a need of cash rationing, how prioritize expenditures, how to organize the accumulation and later the clearance of this kind of arrears, and how cash managers can inform the budget and other public finance policies to avoid cash rationing. I will jump this slide. This is just basically the World Bank has put together a framework for debt managers to respond to the crisis. And just take a look in that steps 2 and 3 put very closely debt and cash management that relates to scrutinize the government funding needs, basically understanding how much the government needs to raise in the market because of the crisis or whatever is happening. And later on, once you understand how you can ensure that you have sufficient and timely government funding to deal with these needs. This is also basically to represent what are the instruments that governments can use in terms of cash management, these colorful ones. The black ones is the T-bills and liquidity buffers that could meet the objectives of cash and debt management, and many other instruments that debt managers has been using in regular basis, and in crisis time it may be one country using more than one instrument and the other. Just before going to the conclusion, in terms of monetary financing, there are some data here also. The DEMPA that I've mentioned before also has a debt performance indicator that assess how countries has been using monetary financing or overdraft facility for the central bank. I won't go too much on the results. This is the same sample of 80 countries, but just I'll just very briefly explain like what is expected. So what countries are expected is that if they need to use overdraft facility, there is a limit in terms of size and in terms of time, the tenor. To get a score A, it's expected that the government will not use these funds for more than 2 weeks, for example. But here I'll leave it for you as a reference. What are the results? So also some room for improvement. And a couple of questions that may arise in terms of monetary financing, just mentioning here, for example, in table 3, the amounts. So there is this reference, a paper from the IMF in 2012 that shows that most countries, if they use this overdraft facility or ways and means, they don't use more than 10, let's say 20% of revenues. But you have this information here, but also other interesting information on how interest for these facilities are set, which kind of beneficiaries can take advantage of these schemes. So just food for thoughts again in terms of what should be the size, if needed be, to use this kind of instruments. And lastly, also related to monetary financing, but maybe in a different way, because the way we know monetary finance is basically the central bank lending to the government in a direct transaction. But what we have seen since the global financial crisis, and maybe more frequent now in the COVID-19 crisis, is government's central bank buying bonds in the primary market. So in this case, very clear that it's to finance the government, but also in the secondary market, that it may be to ensure financial stability in the market. But at the end of the day, the central bank may be opening some space for governments to issue more bonds for the investors who has sold the bonds for the central government. So last point here, interesting also to see that Philippines, and I know that Brazil has done the same, that calling some dividends from the central bank, even if the law doesn't require the central bank to transfer dividends for government. In times of crisis, this is an instrument that some countries, for example, Brazil and Philippines, has used to increase their funds. So just to conclude, in terms of conclusion, as I've mentioned, in DEMPA indicators related to cash management, cash flow forecasting, we see that even before crisis, full implementation of modern cash management is still a challenge. You can take a look later with in more details, but the measures that countries has been adopt are pretty similar in COVID-19 crisis, basically to support households, employment, financial stability. And as I mentioned, central bank has been playing a very critical role in this equation. And as the crisis has been maybe large and especially much lengthy than what we were expecting, it's interesting to know, to see, even if you consult the sources that I've consulted, that measures were not taken like once. So there were some measures starting in March 2020, and up to date, mostly every month there are different measures being taken. So I'm sure cash managers and debt managers' lives hasn't been easy in terms of incorporating so much information to update the cash flow forecasting, to understand how much funds are needs, how to use central bank support, review cash buffers, so on and so forth. And lastly, of course, the crisis may open some opportunities to review government expenditures in terms of prioritization. Some I didn't mention, but of course, many countries has been cutting some expenditures that are not really priorities. So reviewing what is priority, reviewing public policies and practices to strengthen coordination between them, cash debt management, budget management, fiscal policy management. So there are many opportunities arising from the crisis that we should be mindful. So let me stop here. Sorry for taking much more time than I was expecting. I leave here my contact in the bank, so please feel free to reach out to me, and I'm happy to take questions in the Q&A if there are any. Thank you.
Thank you very much, Leandro, for this this great overview. I mean, very rich and inspiring, and it really sets the stage. And thank you also for your offer to hold a training session on cash management. So we'll certainly take that up for Asian treasuries, because indeed there's so much we can cover in 2-hour webinar, and each of these points actually would benefit from a deeper dive. But what I noticed that indeed our cash managers, treasurers are adapting from sprinting to marathon running. And so really trying to leverage the good institutional practices in terms of revenue forecast, in terms of collaboration, coordination with debt management and central bank is key. Also interesting to see the short-term versus the medium-term impact of all the measures that have been taken. Indeed, there has been a flurry of fiscal response measures in the first and second wave. And so now the responses to the third wave in Europe and the second wave in Asia needs to look a bit differently because notably of the long-term consequences on fiscal sustainability and liabilities. You mentioned also revenue prioritization. That's a very important point. Would be interesting to hear a bit from the colleagues how that has happened, because indeed it is a great opportunity sometimes to clean up the public investment portfolios where you have some projects which are not really moving, and reprioritize expenditures. So it would be great in the Q&A to maybe get input from the members. But before that, let me hand over to Mr. Young-Won An to hear from his experience in Korea. I mean, Korea is really stands out as a country that was very proactive at the beginning of the crisis. I remember that you even prepaid some of the services to allow your companies and private sector to have sufficient cash flows. So over to you. Thank you.
Hello, everyone. I'm Young-Won An, Deputy Director for Treasury Division of KMOF. Thanks for giving me the opportunity to make a presentation in this PEMNA webinar. And today I'm gonna talk about the government's cash management under the crisis of the COVID-19, especially focused on the experience of the Korean government. This presentation will begin with a brief background of the cash management system of government. After then, let's look into the challenges of government's cash management under fiscal stress such as COVID-19. And finally, I'd like to introduce the Korean government's response and strategy to tackle these challenges. I think that this background is too easy for the T-CoP members here, but I'd like to remind you of these facts for the next conversation. Why does the government need cash management? That's because there is a time difference between the revenue and the expenditure. Tax revenue tends to be concentrated at a certain period in the year, while budget expenditure tends to be balanced throughout the year. As a result, government sometimes has idle cash and sometimes faces shortage of cash. And if the government has some idle cash, it has to be operated. And if there is a shortage of cash, the government have to borrow some money. From this fact, we can derive the basic principles of government cash management. The first one is to supply fiscal funds for the project at the right time. The other ones are to minimize the borrowing cost and to maximize the operating profit. The reason I mention this is to say that these three principles remain unchanged in any fiscal stress situation, such as COVID-19. Next, I will talk about the changes of conditions or challenges of government cash management caused by COVID-19. First of all, the fiscal stress such as COVID-19 make it difficult for government to forecast the flow of cash. In the early stage of COVID-19, these challenges was expected only in terms of decreasing revenue. But as the COVID-19 situation continues, the Korean government is experiencing that the challenges can appear in various aspects. I will explain this simply in two phases. The first one is the pandemic phase that we might normally expect. In this pandemic phase, the tax revenue decreases for a variety of reasons, such as falling trade, worsening corporate performance, job loss, and so on. And the government's tax cuts and deferments will also have a negative impact. Also, worsening financial market conditions could increase government's borrowing costs. On top of that, there are much expanded cash needs to finance COVID-19 related emergency spending. These are generally predictable challenges during the fiscal stress situations. However, the Korean government has also experienced other challenges since the second half of the last year. That is, increased revenue more than our forecast. And this means there are increase of the idle cash. I would like to call it as the recovery phase. Even if the COVID-19 pandemic is not over, the economy may face this situation. Depending on people's expectation for economic recovery, so the government always needs to be prepared for this situation. Next, I would like to talk about the Korean government's strategy or measures to tackle these challenges. Above all, we want to enhance the accuracy of revenue forecasting by establishing a direct communication channel at the working level with the tax authorities. And at the pandemic phase, to supply adequate fiscal funds and to minimize the borrowing costs are the most important principles. To this end, the Korean government took various measures. Firstly, we have increased the ceiling of short-term borrowing by 33% and increased the budget for borrowing cost by 50% in 2021. And regard of cash allocation for each specific budget program, we are operating it at monthly base, but after COVID-19, it has changed as a daily or real-time base, especially for the COVID-19 related expenditure. Last but not least, I'd like to introduce Korean government efforts to maximize the idle cash operating profit. The first measure is market competition-based idle cash management. We have a system that selects 3 private financial institutions every 3 years through competitive bidding. In addition, even during the 3-year period, the scale of the idle cash operation is distributed differently among institutions throughout the performance evaluation every 6 months. The second measure is to gradually reduce the target balance of Treasury single account. This is an effort to maximize operating profit by minimizing the idle cash in TSA. Furthermore, this target goal is very effective because it is linked to the performance rating and salary of Treasury division's staffs. Finally, daily operation scale is optimized by real-time base. Through real-time revenue and expenditure monitoring, all amounts exceeding the target balance are operated. I'm sorry. So far, I have introduced the Korean government's experiences to tackle the challenges under COVID-19. I will end the presentation here. Thanks.
Thank you very much for this very efficient presentation. I mean, that's indeed very interesting to see how you've weathered the crisis from a public financial management and cash management perspective. And indeed, there are already questions coming in from the members on your last point, that's on the prioritization of expenditures. So if you could maybe kindly elaborate a little bit on this. So what criteria did you take to prioritize expenditures? Did you postpone some less urgent expenditures if needed? I mean, has there been a cash rationing or not? That's maybe the first question. And if you needed to prioritize, because you mentioned daily based cash allocations for COVID emergency spending. So what were your criteria for prioritizing and how did you do that? Thank you. Other colleagues, please send in your questions to the chat box or raise your hands if you want to come in the Q&A now. Thank you.
For better delivery, I will use translation.
Fabian, I see Mr. Joshi Swas raised his hand.
Yes, I had a question for the first presenter. I really like the chart that you had and the comment Fabian made about people some of them trying to run and some of them trying to do many things. In cash management, it's not just how you manage the cash, it's also how you manage the markets where you raise your T-bills or other bills, etc., so that you can reduce costs. So now that becomes a different problem for countries, especially the ones with, there are three levels of countries. There are advanced countries, there are developing economies, and then there are people who are struggling, etc., or people in crisis. Now, and I think Fabian will be able to connect what I'm also referring to. There are countries which are trying to expand their market so that the cost of borrowing could come down. But in the pandemic, this has become a different problem for them. So what would you think in terms of prioritization of these reforms that are needed to bring down the cost of borrowing? In a situation of crisis that we face today, for all three levels of countries. I mean, advanced countries can probably keep doing what they're doing, but what about the countries which are really struggling with these issues? What is your take on this? What is your opinion and views on this?
Well, thank you very much, Suhas. And I think that's also something that will be addressed a bit in the Philippines presentation. But maybe if Leandro can say a word about that after we hear from Korea regarding the question from Laos, but which I think many other members also had on their mind. Thank you.
Thank you, Fabian. Just quick thoughts from my side. As you all know, developing the domestic market, it's even in the debt management objective of some countries, but this is not a short-term process. This is a kind of long-term process that the sooner you start, the better. But in crisis times, it's hard to think about taking some action to develop the market, especially because market participants, they don't have much appetite to engage in some structures to develop the market, so on and so forth. So I think that something that is essential either in crisis times or even before, it's that transparency. So the more data countries can provide in terms of what they're doing, what are their policies, reviewing the strategies, reviewing their policies, and making it public and publishing data, I think this is quite key, because investors will be looking for it and they will be very keen to say, even in crisis times, the countries, they have been mindful about the importance of publishing data, providing that transparency. So they may be more inclined to engage after crisis. But of course, in practical terms, I think it's basically to go into buy the book and see, okay, what can be done in terms of borrowing strategies. So should we shorten the debt? How much it will be increased? So what kind of documents we have to reveal? Either the annual borrowing plan, but more in the short term, auction calendars, stick to the auction calendars and being very, very clear in the messages that you're sending to the market that this is how much we need. This is the instruments that we have available and how much we are open to pay to have these extra funds that we need. So let me stop here, but I do think that transparency should be very a key issue at this point.
Excellent. That transparency, and I think you also mentioned the role of the central bank in the secondary market to stabilize the secondary market at some point. But let's go to Korea and ask him if he can share his views on the expenditure prioritization. Mr. Yongwan-an.
Let me answer the question from Lau. Actually, we have a contingency plan. The plan is kicked in when the revenue is lower than we expected. So we do not reduce expenditures according to priority list. in that case, we just make short-term borrowing so that we satisfy the cash shortfalls. That is our practice.
Great. Thanks a lot. Can we maybe hear from other members also how they have dealt with prioritization? May I call on Malaysia or Indonesia to share their experiences? That's really a very important point. So who wants to go first?
Okay, Fabian. Rusdi from Malaysia.
So much. Go ahead.
Um, uh, for Malaysia, it is same like other countries also. We do have a problem during the pandemic, especially during the MCO implementation, where the revenues is falls in quite significant amount, and at the same time, the expenditure needs to be increased for the stimulus package. So what we did is to increase the financing. So that's why the financing programs changed quite a few times, and it is expand. And we go for the short term, especially I think Treasury bills is priority, and at the same time we also looking for other source of revenue that we have to recalibrate the timing because of the cash requirements increase quite significant during the half of the year last year. So that's why we have to adjust the revenue timing from maybe we have to take the revenue from end of the year to be put it to get it as soon as possible during especially during April to June, when the stimulus package is already announced and need to be implemented. And that's for now.
No, great. Thank you very much. So first response, financing, and then trying to look at the sequencing, the timing of expenditures, focusing on the most urgent ones and deferring the later ones. I don't know to what extent countries have really reviewed the expenditure programs and also the capital expenditure programs to cut some projects and reprioritize, reroute expenditures. I know that that's an area Indonesia has been working on a bit. So I don't know if they want to share with us their experiences. It would be great also maybe to hear from Thailand, which also had significant fiscal responses to the COVID crisis, how they have prioritized expenditures, financing. Who wants to go first from Indonesia? We are striving for an active community, interactive community. Daddy, may I call on you? Well, he seems to have audio issues. Let's see, the mic is not connected. Okay, then may I maybe invite Thailand if they want to share their experience with us? Okay, so maybe while colleagues collect their thoughts, let me opening up to anybody. Also, we see we've got a few partners which have joined us also from USTA, from the EU. So if you wanna come in and share your views, please do. Okay, so it seems that prioritization is not such an urgent issue. Maybe it will be more for the recovery phase, which will be prepared. So if there are no further questions on that panel, then maybe we can move to the next panel. And this gives us actually a time buffer, which is very welcome. The last call. Okay. So then let's move to the second session, which will go a bit.
Oh, sorry, we have
yes?
a question from Vietnam.
Oh, we have one. Okay, I haven't seen that. Great. Please
Yeah.
go ahead.
So thanks for all of the presentation. I'm just, representing the Vietnam counterpart on their behalf. For Leandro's presentation. So the question is, thanks so much for the very useful, extremely informative presentation. And there's a question from the budget department related to the central bank's overdraft. And they would like to understand, you said that, yes, in case of emergency, some countries do that. But there should be a limit. So they would like to understand what is the range in that limit? How do you set the limit? Is it depending on the growth on the GDP or any other indicators to help them to set such limit? And usually how long should the loans be? Usually I think it's advisable to be very short-term loans, but it would be nice to share more information on in other countries on the limits and the time, the duration of these loans. If you could share some further information on this. Thank you.
Thank you very much, and I'm sorry, maybe I have gone through very fast in my presentation, but there is one specific slide with some tables, and I left the reference there. It's a paper from the IMF of 2012 that these issues are explored. So in terms of limits, there is a sample of many countries and even divided by region, but normally these limits are set in terms of revenues, generally looking in the past 3 years, an average of the past 3 years. So in this specific paper, the number of countries are framed in terms of some countries that set the limit below 10% of the revenues or between 10 and 20%. So there is this distribution in the table, and in the text of this paper, there is a couple of examples, even some countries that use different measures. So for example, Costa Rica, that by the time of the paper in 2012, they used the limit not in terms of revenues, but in terms of expenditure. So there are different ways, but a short answer would be that normally countries look at level of revenues, looking on an average of the past 3 years, and most of countries limit it to somewhere between 10 and 20%. In terms of tenor, I also mentioned that, for example, in EU, I think there is some representative from EU in the call. Maybe he or she can step in. But I know that in EU, these overdraft facilities are just allowed for daily support. So the central bank can step in, but just for temporary needs, and the government has to pay it back by the end of the day. So it depends. What DEMPA says is that for score A, it's required that these kind of facilities don't last more than 2 weeks. But I mean, we can search more in terms of other country experiences. But for the moment, I would suggest taking a look in this paper that I make reference for the source in my presentation.
No, thanks a lot, Leandro, and thanks, Fernand, for the good question, which will also certainly come up in the second session. I mean, one point also to bear in mind is the potential impact on the macro of excessive central bank financing, right? The impact on the monetary policy, the impact on the exchange rate policy. So that's something to look at. Obviously, in terms of crisis, there may be when the economy gets depressed, the impact on inflation may be limited. But if this continues massive central bank financing during recovery, then there may be issues there. Also, I think a very interesting point to bear in mind is the cost-risk balance, and that's something we can discuss. And when we see the numbers in the Philippines, it will be interesting to look at that as well, trying to see the different financing strategy at the time when interest rates are historically low, but may not always remain like that. But unless there are other questions on that panel, let me make a last round of calls. Unfortunately, Indonesia seems to have some audio issues. Are there any other questions, or should we move to the second session? Just precisely about balancing the cost and the risk and responding to the crisis. Okay, let's say that silence is consent. So let's move then to the second session. Let me invite Mr. Eduardo Anthony Marino to share the Philippine experience. So from an assets management perspective and from a broader public sector perspective, and I think that's particularly interesting. Trying to see how he's leveraged the TSA and even beyond the TSA. Let me ask maybe all other.
Once more, may I ask the Secretariat to flash the screen, the presentation for me? I'm using my cell phone and it's a bit difficult.
Sure, we'll put up your slide.
Great, thanks. Let me ask maybe all other members to mute because there was a bit of background noise. Thank you. The floor is yours, Eduardo.
So good morning and afternoon to everyone. The title of my presentation is Fundraising is Cash Management, and definitely during the COVID pandemic, that's pretty much what you need. That is pretty much the priority of any cash managers in any treasury, making sure that there's money to pay for whatever needs to be paid. So that's the primordial concern that we had in mind when the pandemic struck, and to a great extent that's still we're operating in a similar mode today. So next slide, please. Okay, so this is the problem, and again, it's not as bad as it is today, but the fundamental issue of COVID from the point of view of cash management is the substantial difference between revenues and expenditures. As you can see at the start of the pandemic, when the pandemic struck the Philippines, expenditures hit a high of nearly twice the revenue inflow for the months of April 2020 and May 2020. So again, there's no option here for the Treasury. It's not an option to reduce expenditures. Expenditures must be kept at whatever level is necessary to address the pandemic. So any revenue shortfall has to be funded or in some way or another, usually through borrowing, and that was pretty much what we have been doing over the past the past year, even until now. So next slide. So this is the I showed this the table in the session yesterday, but I think that what basically I just want to point out that one of the things that we were forced to do during the pandemic is to rely heavily on short-term financing, and that's for two reasons. First, nobody wants to lend at longer than 3 years or 5 years at most during the pandemic, so because of so much uncertainty in the balance sheets and the revenue flows of financial market participants. All they're willing to lend to the government or available to the government is at maximum 3 years consistently, and they would actually prefer to lend us much shorter instruments in the form of treasury bills, at most 1 year. So we have no choice but to rely on that. And the other thing is, aside from availability, we are also conscious of the fiscal implications of our borrowing. So of course, to borrow, let's say 10 or maybe even 20 years, you need to pay higher interest rates. And that's not, we did not want that. We did not want that in a pandemic situation, because as much as possible, we wanted to dedicate our scarce fiscal resources to COVID-related expenditures. So as you can see, even though the debt burden increased substantially by nearly more than 14% of GDP. In fact, from 2019 to 2020, the interest payment burden in the form of the ratio between interest payments and expenditures still is relatively low at 9%, below 10%. So that was achieved by heavy reliance on short-term financing. So now the consequences is, of course, you can see in this chart, in this table, the average maturities of our debt. So the trade-off was not a stark, because we still have, in the grander scheme of things, a very long debt portfolio in terms of average maturities. Next slide. So one of the finest example of such a short-term financing and the very cheap financing at that is the what we call direct central bank support. So it is initially 300 billion pesos when the pandemic started, and we upsized it by another 240 billion pesos in October 2020. So for a total of 540 billion pesos. So here are the terms of this central bank support. It's zero interest. It's 3 months, and which can be renewed upon, of course, the approval of the central bank for another 3 months. So that's a total of 6 months. At the end of that 6 months, we have to pay back the loan one way or another. We need to pay back. We need to produce the cash to pay off the central bank. And of course, once the obligation is extinguished, we can request for a new set of support again. The amount of the central bank support is capped, legally capped at 20% of average annual revenues for the last 3 years. So I think that was the point mentioned by our colleague from our colleague earlier. The other support of the central bank that made fundraising, the short-term fundraising at that much easier, is their credible promise to purchase government securities in the secondary markets. They don't actually need to purchase. They just need to make people believe that they will, if necessary, purchase the government securities, and that's enough to assuage some of the risk sentiments dominating the market at that time. As you can see, when the pandemic, the quarantine protocols in the Philippines started in March 2020, around the middle of March, so you can see the spike in the interest rates here. But after a few months, as you can see, there was a substantial drop, and a big part of that is because of that participation, that commitment from the central bank. So all of this is under the effective fiscal monetary coordination. So this is very critical in ensuring that we can ride this COVID pandemic through. Next slide. The other thing is that in addition to those relatively conventional funding sources, you have to tap unconventional funding sources within the public sector. So so we have been implementing the Treasury single account framework over the last 8 years, about 7 to 8 years. So prior to that, there has been a lot of accumulation of cash balances held by other government agencies outside the TSA. So prior to the TSA, it is absolutely necessary to give cash to your line ministries in order to implement projects. So you have so many years of that kind of practice, and the end result is that there's substantial balances floating around the system one way or another. So we have access to that information, and we tried to secure some of those balances in order to make sure we have cash to pay for the COVID expenditures. These cash balances are meant for projects, but for one reason or another, those projects are just being implemented at a very slow rate. So what we told the agencies is that, look, if you're not going to use it this year, let us use it. And then if you need the money, we will return it back to you. Now, because technically, we are part of one national government. We're borrowing money this is what we term intra-agency borrowing, and of course it has to be interest free. We need to return, the Treasury needs to return it, but yes. The other sources of cash resources is from our state-owned enterprises, or as we call them in the Philippines, government-owned and controlled corporations. So we ask for higher dividend payout ratios. We ask them to advance their dividend payments as soon as possible. And of course, we encourage them to participate in the government, in our government auction program. Now, just to give an indication just how big the assistance provided by our state-owned enterprises. So on an average year, the state-owned enterprises remit about $600 million in dividends to the National Treasury. But last year, they remitted something like $2.6 billion. Of course, they remit in pesos, so that's for just for ease of reference. So just imagine that's more than a tripling of the average remittances just to respond to COVID. And next slide. So that's it. So I think one last thing I heard mentions about potential concerns about the central bank support. And well, in the past, direct lending by the central bank is verboten amongst IMF, World Bank, and what have you. So a responsible government does not do that in the past. But I think the COVID situation made everyone rethink that proposition. And the issue is that even after the substantial support provided by our Philippine Central Bank, you don't actually see any substantial negative impacts, macroeconomic impacts of that coming from their intervention. So, for example, inflation at least last year remained very, very stable, and there was concern that if monetary financing of the deficit can lead to exchange rate crisis. Well, last year our exchange rate actually strengthened. So the Philippine peso strengthened against the dollar. It started the year at 50 pesos per $1 and it ended at around 48 pesos per $1. So the strong fiscal monetary coordination did not have the dire effects that our advisors used to fear when they warn everybody not to do this type of activity. Now, to how long this can last, well, we're not sure, but to the extent that it does not have such negative consequences, then I think it is up to us to take advantage of whatever resources we have in order to make sure we adequately respond to the pandemic. Thank you.
Thanks a lot, Eduardo, for this excellent presentation and very data rich, and for addressing also the questions we had on the macro impact of central bank financing. And indeed, as long as it's counter-cyclical, when the economy is depressed, in this case, the global economy is depressed, there's very little FDIs. Indeed, the risk of inflation and exchange rate is limited. I think that begs the question then also how to adapt our different response mechanisms and instruments for the next phase, the recovery phase, right, which will also require substantial investments when our fiscal buffers have really reduced significantly, and that went up quite massively, by 38%. Maybe just two quick questions. One is going back to an earlier point mentioned, the silver lining of this crisis is really to improve. And so do you see that the sweeping you've done with agents either cash held by agencies, is that maybe a way to expand the TSA beyond the crisis? Obviously for SOEs it's different. Thank you for giving us this number. It's quite impressive, quadrupling the dividends. For some SOEs, so I guess that also includes the central bank. So for some which don't really need much cash and financing for their own investment, the impact is neutral. However, I wonder what the impact would be for SOEs that would also be called upon in the recovery phase to boost their investments and their spending. And the fiscal risk and contingent liabilities that brings with it. But that's maybe something we can discuss further during the chat. So Ed, I'll propose that maybe you come back to this question during the chat. While we hear from Vietnam, a quick update on how Vietnam has responded very well to the crisis, both on the public health front, but also on the public finance front, and had actually similar questions also in terms of central bank financing, but increased coordination with different debt management entities in the central bank. The floor is yours, Hanoi. Thank you for your update. I think you're muted in Hanoi. We cannot hear you.
Hello, 1, 2, 3. Unmute. Hello.
Very good. Now.
Can we
Thank
start
you.
again?
Now. Yes, please.
Good morning. I am from the Cash Management Department of the State Treasury of Vietnam. So I would like to thank the forum to allow Vietnam to update you the situation regarding cash management in the context of the pandemic COVID-19. You may know that we have successfully controlled the third outbreaks of the pandemic. You know that over the past 30 years, we have not had any confirmed cases. So, however, we realize that the impact of the COVID has been very serious. Economic activities have been stagnant and millions of jobs been lost. At the same time, Vietnam was also affected by natural disasters. So in such context, the government of Vietnam set our dual objectives. Safe control of the pandemic and economic recovery and growth to protect the people's health, to strengthen our defense strength and foreign relations. Regarding the fiscal policy, the government have embarked on a number of packages to support businesses, such as deferment of taxes and land rent. We also reschedule and defer corporate income taxes. At the same time, we increase expenditures for social protection. And we also try to accelerate disbursement of public investments to prepare for economic recovery and growth. We also adopt a tightening fiscal stance by strengthening fiscal discipline, promoting expenditure savings to focus resources for the pandemic controls. On the monetary side, the central bank also adopted policy to reduce basic lending rates. The purpose is to stimulate productive and business activities and to provide credit enhancements and to manage exchange rates. So with the policy response, Vietnam was able to maintain positive growth in 2020. From the budgetary perspectives, we achieved good budget balance targets. And we also successfully deliver on our budgetary mandates. In terms of debt management, we maintain our debts below the prudence thresholds for the nation. So that is the overall background of Vietnam today in our economic development and management. Now I would like to go to cash management in our case. In our cash management, we have to keep in mind two mandates. One is prudent and efficient cash management to make sure that we have sufficient funds for budgetary needs and other transactions, especially in the context of increasing budgetary expenditures to control the pandemic. At the same time, the revenues is also declining because of the tax difference. On the other hand, we also like to efficiently manage our idle cash balances. For specific measures regarding cash flow forecasting, we collaborated closely with other units and agencies such as the tax authorities, the customs authorities, the state budget department, the debt management office to capture daily cash flow information, to update the daily information on the inflows and outflows of cash, fluctuations of cash flow pattern, so that we can recommend relevant cash management actions. In 2020, for the quarterly cash flow plan, we regularly update our cash flow forecast using different budgetary scenarios. Especially, we developed 3 scenarios for the management of our cash. based on the projections of our growth rate. And according to the plans, we actively managed our cash in a flexible manner in response to all the funding needs and the payment needs of other transactions. Secondly, we also strengthened coordination between cash management and monetary policy operations by sweeping all the cash balances into our accounts, TSA accounts in the State Bank of Vietnam. We also provided informations on cash movements and our term deposits in commercial banks. This is to facilitate the State Bank of Vietnam to conduct their flexible monetary policy operations. You may know that the cash resources concentrated in the State Bank's account assisted the State Bank of Vietnam to control interest rates, to control inflation, so that we can, maintain a strong and robust fundamental factors to facilitate business and productive operations activities. The third actions is to strengthen risk management in our cash management. Especially, we set out the limits on the use of idle cash. The idea is to, hedge against liquidity risk. The fourth measure we implemented is that we strengthened the adoption of ICT in all our cash management operations. By now, most of our cash management activities are electronic. For example, we placed our term deposits electronically. We do reverse repos electronically. Everything is done through auctioning, electronic auctioning. So regarding the experience lesson, we would like to share to cope with COVID. We need to be flexible and timely react and respond. In the short term, we need to monitor closely our budget revenue and expenditure flows so as to improve the quality of cash flow projection. Secondly, in the long run, in the medium term, we would like to aim at active cash management in a market-based manner and to strengthen the collaboration between cash management and monetary operations to ensure liquidity for the government at all times. So that's the end of the presentation from Vietnam. Thank you.
Thank you very much, Vietnam, for sharing your presentation. Ms. Nga, that's very interesting to see how actively you have managed the cash situation with really daily monitoring and very strong cooperation with different entities, the revenue agencies, oversee budget department, debt management, but also the central bank. And I think that's really something we've heard across country experiences. And it would be interesting to see to what institutional reforms that could lead, how this very strong cooperation can be institutionalized beyond the crisis. What's also quite interesting, and that's maybe one point, would be great to hear a bit more from you and other countries, is also the aspect of risk management, because indeed, many of these short-term responses have medium-term risks in terms of fiscal sustainability, right, on the financing side, but also this is contingent liabilities at SOEs, which have also been hit by COVID. So your point of about more proactive risk management is very interesting indeed, because it's true that fiscal risks also eventually hit the Treasury, even if there's a delay. So let's maybe come back to that later in the Q&A. But first, if I can return maybe to Eduardo to see if he wants to come in on the two questions, and then maybe ask Guillermo if he wants to address Cambodia's question about cash forecasting. Thank you. Eduardo?
Fabian, can you repeat the two questions you were referring to?
Thank you. So one question was how to make this increased sweeping and basically the expansion of your TSA by sweeping the idle cash balances of agencies, how to make that stick. You mentioned Treasury has to return these cash balances later to the agencies, but there's certainly an opportunity to expand the TSA to make it more efficient. So what would it take to really take this crisis as an opportunity to expand? That's the first question. The second has to do with the SOE financing. It's quite impressive, this 2.6 billion of dividends. So in some cases, I guess it's neutral really on for the SOEs. I guess I'm thinking of the central bank dividends. But in other cases, SOEs may need this cash themselves, as they have also been hit by COVID, both on the revenue side, so that many of the fiscal response measures were, for instance, reducing the price of utilities or deferring the payments of utilities. And SOEs will certainly also be called upon in the recovery phase, as many SOEs are present in the infrastructure sector and the transport sector. So these are questions on how to make how to expand the TSA and how to manage the fiscal risk coming from SOEs.
Okay, so the first question. So I think that it would really depend on the legal framework or the regulatory budgetary framework for each of the countries on what measures they can take if they do decide, if other countries have similar problems with the Philippines in terms of cash balances outside the TSA. For the Philippines, the only way that we can extinguish the liabilities, the possibility of returning it to the other government agency is if the agencies themselves give up the proceeds, or we can prove and demonstrate to our that those balances are no longer serve any other purpose. But that takes quite some time to establish. So the quickest way to go about it is that need to just ask our other NGAs to simply give up the cash and then certify that the project for which the balances serve its purpose no longer exists. So that's one. Second is, well, we demanded the SOEs that we secured the higher dividends from are usually very strong in terms of the cash position, revenue. So any additional fiscal risk we're seeing that is not really that substantive. They're still strong, going strong, even after remitting those dividends. And of course, and that's because they have substantial retained earnings that they're really not using anyway. Because for the longest time, when they do remit dividends, it's only as a fraction anyway of their net income. And to the extent that they have not been using the old retained earnings, then yeah, they can pretty much handle the strain that we are asking them to bear to help us with this COVID pandemic. But so of course we don't demand such a higher dividend contributions from those who have weak balance sheets, weak financial positions because of those fiscal risk considerations.
Thanks a lot, Eduardo. So it means that you're also doing active risk management and analysis in that respect. And I guess that's also certainly very relevant for Vietnam, given the size of SOEs and the importance of the budget. And then they represent about a third of budget revenues. would be good to hear from Vietnam on that as well. But before that, let me go over to Guillermo if he wants to address Cambodia's question about payment forecast. Thank you.
Thank you, Fabian, and thank you all for your great presentations. I think that the insight that we're getting here is great. I think that the question is one that you really need to take a step back. And although we are not yet out of the woods in terms of the pandemic, we're still facing challenges. I think it makes us think about how we reacted after one of the first important crises, the global financial crisis in 2007 and 8, which asked many of us to think about establishing a cash buffer target. So I'm going to try to answer Cambodia's questions, but first I like to say that it's not easy to look hindsight and say, how do you implement the strategy when you're going through the crisis? I think it's more to pause and think about what do you do now that we've gone through such a crisis, and think about two important things. The first one is, as the DMO presentation yesterday said, that the DMO office does not determine how much cash needs to be raised. They basically need to know when and how. And I think that the cash management office also needs to be able to execute the budget on a timely basis. So when you think about, okay, what can we do to better do our function? Many treasuries and cash management units are sort of the last piece of the chain. You know, they are the ones who have to react. They have the mission to say, how do we execute the budget going forward? So I think that first question is, what do we do to strengthen our cash flow forecast? And second is, how do we recalibrate the cash buffer? So to answer the first question, there's many ways to strengthen the cash flow forecast. The most important one is, how do you improve your process to gather all the information on a timely basis that is actionable? And I think that there's many tools to do that. One of them is implementing business intelligence, something that we're working on with our Indonesian counterparts. So that's the most important thing. There's ways that you can sort of prepare for the next pandemic. The first one is you can do sensitivity analysis. You can run Monte Carlo simulation and then look at, say, what would my cash shortfall be? For example, if I look at the lowest percentile of the distribution of revenues for the last 2 years or 3 years, including the pandemic. And then what would be my 95 percentile of the highest expenditure component in like 2 or 3 day period, and then look at what your shortfall is. So that's one way to look at it. So it's basically doing simulation analysis. It's basically prepare for that one crisis scenario. So that would be one component. In terms of the cash buffer, there's a couple of ideas. The first one is, how do you build your transactional buffer? It's basically trying to think about establishing two buffers, one to address the cash flow forecast error, and another one to address the potential lack of access to the debt market. For the first one, there's different ways to calibrate it. I don't want to get into details, but think about establishing a cash buffer that would address, let's say, 6 months of actually like the 5 worst drop in the variance of the cash flow forecast for like a period of 1 year or 2 years. If that variance, for example, could be 5 or 10% of the expenditure component. And then the second one is discuss or get in touch with the debt management office to determine what would be an ideal level of debt to address in terms of a crisis. And that could be potentially debt service on a 3-month rolling basis, or the maximum of a combination of 3-month average going forward, or the average of 6 months, for example. So those are things to think about as you seem to address, what is in terms of your forecasting and your cash management. And then the last thing I want to mention is, as was discussed at the beginning of this presentation, is that not many countries have a good cash management strategy in place. So this is a good opportunity to think about developing a cash management strategy for the let's say 2 to 3 years that addresses the pandemic component. So with that, I finish my remarks, and thank you for the opportunity, Fabian.
Very much, Guillermo. Very, very useful. I may add maybe 2 points. One is also having a good commitment control system in place, so know what's coming. And I think that will be particularly important for the recovery phase if we start launching all these projects. Some may not be as ready as we wish, and that's something that we can address in a forthcoming webinar or seminar. The second, I guess, is also incentives. How to incentivize agency to give you reliable forecasts. So the sensitivity analysis is one mitigating factor, but I like the way the UK, for instance, charged a fee for idle cash, right? So money talks. That can be a good incentive. But that's also something we can discuss maybe later on. Let me maybe hand over to Indonesia, who wanted to come in and share their views. Thank you.
Okay, good morning, Fabian and ladies and gentlemen. Good morning, Patelo. My name is Tio. I'm from case. Thank you, Pak. My name is Tio. I'm from case management. Actually, I'm on leave now, but because this is very important, so I joined the PEMNA program. Well, first of all, I would like to share a brief share about how cash management in Indonesia, how we build a strategy of cash management in Indonesia, particularly in our effort to mitigate and to overcome the impact of COVID-19. As we well understand that our cash management work based on our national budget. Annually, we have a revenue target and we also have expenditures target. So our job in cash management is how to moderate, how to orchestra all the revenues and all the expenditures so that the cash is enough, sufficient to pay for all the expenditures with low or we try to manage the cost of fund as low as possible. So for that purpose, as we also understand that all of our operating revenues during the pandemic, during the COVID-19 pandemic going down. On the other hand, our debt increase. In Indonesia context, the strategic policy taken by our Ministry of Finance is to conduct counter-cyclical strategy. So instead of reducing our expenditure during the crisis or during the pandemic COVID, we increase our expenditures, and at the same time, we try to manage our financing position, the below the line. So the priority of the government of Indonesia currently is how to recover our economic condition. Why? Because we believe that once the economic recover, so the business will improve, the people will have more economic power, and the economic development hopefully will be going higher compared to last year. So this is the big picture of what we have done in Indonesia. And in order to support the economic recovery program, we also prepare some money, enough money, to support the what we call it public goods and non-public goods economic recovery. So we support so we provide the social assistance for the don't have people or less economic power people. We also support our small, medium enterprises and also our corporation. So we Indonesia try to look at the demand side and the supply side of the economy and to support all the parties in the economy. So now, when we talk about the cash management strategy, we understand that in all of the government activity, cash is important. We cannot do something if we don't have cash, right? So when we manage our cash, we prepare what we call as cash management strategy. We closely coordinate with the DMO, Debt Management Office Indonesia, the DJPPR. We also closely coordinate with our central bank. And the third one, we closely coordinate with Cash Plan Information Network, CPIN, in Indonesia. And now we're in the process of preparing our analysis of how to integrate all the liquidity resources outside the Treasury single account. So similar with the Philippine explanation before, that the government actually have many pockets, not only in the TSR but also in other entities. Now we try to identify all of the possible pockets that we may collect, or we
I think we have lost Indonesia. I hope she hasn't been censored because she was talking about the SOE pocket. Okay. Sorry, can you reconnect? Or else I think we got your point. Thank you very much for sharing your experience, and which is actually a very good segue also for the conclusion in terms of the next steps. But just before that, let me go around the last time and ask if there's anyone else who wants to come in for 1 minute comment or question.
Yep, from Thailand.
Great, thank you.
Yep. I just have a bit of question, not for the comments. Basically, I'm from the risk management team, and there's one thing that I think lots of countries also have faced the same problems, that we need to raise a lot of funds through the short-term instrument, the T-bill. Even though right now the liquidity in the domestic market in Thailand, it seems to be quite a lot. And more than okay to raise funds through the T-bill, but I'm quite concerned in the longer run by two things. Right now, the yield curve has been shifted. It seems to move somewhat back to the normal, even though it's in the upward trend. So the concern is that the liquidity for the short-term instrument might be lessened. So what is the problem that might create a problem about the refinancing risk in the longer run? Because right now we also raise a lot of funds through the T-bill. I think 20 or 30% at least of the total fundraising per year. So by that, in the longer run, we also have something that gonna mature soon, less than a year, and also we maybe need to injection another campaign in the foreseeable futures. So if that is the case, we have a lot of piled up of the funding need for short-term instrument. So this is probably the question to ask for all of us about the opinion regarding how to deal with that in terms of the debt managers. And one more thing, because I attend 2 sessions yesterday and today, is to raise concern quite a lot about the potential help from the central bank, and it seemed to be a lot of things going on, starting from the maintaining the policy rate, as well as buying the government instrument, both in primary market and the secondary market. Is there anything else, or is there any other way that we can even motivate or give more reason for the central bank to help us more, because they also have their own code of conduct to help to ensure about the stability of the economy, but not to help the government. So this is kind of like a balance of things that in their mind. But in terms of the debt manager, we also need to concern about that about how to raise the fund enough in order to boosting the economy. So that is our concern from me. Thank you.
No, great. Thank you very much for this excellent questions. Indeed, I must admit that we won't have much time because we have 2 minutes left. So I don't think we can do justice to your question in this session, but we can certainly, if you can share your email in the chat, we'll get back to you on that. And what we can also do, as Leandro proposed, we can have a follow-up workshop on that. So there we can go into more details. Because these are indeed very relevant questions about the liquidity risk, maturity risks, and also the central bank.
Thank you.
I'm sorry if I cannot answer your questions right now. We have 2 minutes to conclude. So let me very quickly conclude by 2 main points. I mean, one is what we've heard across the presentations and the country examples today is that this crisis represents really a unique opportunity to improve cash management. We've seen a much more proactive cash management, much more collaboration between agencies, so with the revenue agencies, the budget department on expenditure prioritization, but most importantly between cash management and debt management. And it's great to see so many debt managers here present today as well. And last but not least, the central bank, which has become our best friend during this crisis. So how can we institutionalize some of these good coordination practices, given that our administrative setup is sometimes a bit fragmented? I think that's really an interesting takeaway. The second is on the prioritization of expenditures. I think that will be particularly important when preparing the recovery package to make sure that it's financially sustainable, but it's also environmentally sustainable. I mean, there's this talk about the green recovery that will invest in future technologies and don't create new liabilities and stranded assets. So that's also something we can discuss a bit further. And third is really this holistic public sector approach, right? Really trying to extend the TSA, trying to bring a bit more agencies into the fold, even if it does take some legal and regulatory reforms. And then having a more proactive, I'd say, SOE management as well. Many countries are trying to move towards a more proactive shareholding function of the state. And I think this crisis shows how useful that is, both in terms of cash management, but also risk management. And then maybe just in terms of risks, as we see, indeed, many of the short-term responses we had now for the first wave, the second wave, is creating risks in the medium term to the long term. Thailand's questions just highlighted that, and I think that's something we need to discuss a bit more. I would propose, if you agree, to maybe touch upon that at our upcoming PEMNA plenary, likely in June. There we'll have much more time to go into that, and hopefully we'll be a bit closer to the recovery and less than crisis management mode. And also looking a bit more at the impact on the policy consistency and coherence and the impact of the central bank financing on macro policies. So while during the crisis it's less of an issue, there also it may become an issue during the recovery when economies are booming. Last point I want to mention is that we will also in PEMNA start an in-depth research program. So the proposal for this year's in-depth research was precisely on cash management. So that's another opportunity for us to go into more details and try to quantify the impact of the crisis on cash management, but also the cost benefits and impact of the different responses, both within Asia. And so we really count on your full participation, but also if you're interested, we can bring in other country examples, other regional examples. Leandro showed a few examples of Latin America, of ECA. We can also tie up with the PEMPAL community of practice, which certainly has similar interests. And so trying to draw the lessons for the future, how to make us more resilient for the next crisis to come. So let me stop here by thanking you for your active participation, your numerous participation. It's really great to see different colleagues participating also from the debt management. Many thanks to the speakers for their very rich presentations. I know it's never enough time, so that's why we schedule future events and deeper dives. And many thanks also to the institutional partners from the IMF, the USTA, and others for their active participation. With this, let me thank you and hand it over to the Secretariat.
All right, thank you, Fabian, for keeping the time. Just for your information, we've initially given a 30 minutes buffer to this session for future reference. So first of all, thank you all, the presenters, for such a great presentations and the participants for such a interactive session. So the Secretary has a few announcements to make before we let you go. So for those who are not here with us at the beginning of the webinar, I would like to remind you that if possible, we will appreciate it if you could send us a photo, a group photo, preferably taken together at the meeting room, or if you're by yourself at home, a selfie will work as well. And this will go to our upcoming newsletter. And the Secretary will be circulating a post-event evaluation survey shortly after this webinar. So please tell us what you think about the webinars, the two webinars actually, by participating in this survey. And all meeting materials, the agenda and even the recordings will be available on our website later. And lastly, just as Fabien mentioned earlier, the online plenary conference for this year, the date has been fixed to June 1st and 2nd. So if you could save the date, the Secretary will be sending out an email for further details. And that will be it from our end. That will be it. Yeah. Thank you all again. Thank you.